Hello and welcome to the session. Taxation LO2. Determine taxation liabilities for unincorporated organizations and individuals. How do unincorporated organizations handle tax liabilities? This video explores the taxation landscape for sole traders and partnerships in the UK. Discover the characteristics and implications of personal tax on business profits. Unincorporated organizations lack separate legal identity from their owners. Common forms include sole traders and partnerships. Owners face unlimited liability, affecting personal assets. Profits are taxed as personal income, not corporate. This structure offers simplicity but entails financial risks. Operating unincorporated offers simplicity and control. It involves fewer legal requirements and more privacy. However, it exposes owners to unlimited liability. Higher income levels can lead to tax inefficiency. Business continuity may be affected by personal events. Individuals pay tax on employment, self-employment, and investment income. The tax year runs from April 6th to April 5th. Pay applies to employees, while self-assessment suits the self-employed. Sole traders add business profits to personal income. National insurance contributions are mandatory. Sole traders face personal taxation on business profits. Profits may push individuals into higher tax bands. There's no separation between business and personal income. Straightforward calculations can lead to high marginal tax rates. National insurance contributions add to the burden. Partnerships involve two or more individuals in business together. The partnership itself doesn't pay income tax. Profits are allocated based on agreements. Each partner is taxed individually on their share. Joint liability means shared responsibility for debts. Income tax applies to earned and unearned income. National insurance contributions fund state benefits. Capital gains tax is charged on asset disposals. Inheritance tax affects estates above certain thresholds. Corporation tax is only for incorporated companies. Trading unincorporated affects personal tax liabilities. Profits are taxed annually, regardless of withdrawals. National insurance contributions increase the overall burden. Higher profits may lead to higher marginal tax rates. This often prompts consideration of incorporation. Tax calculations for sole traders start with turnover. Deduct allowable expenses to find taxable profit. Apply personal allowances to reduce taxable income. Income tax rates and national insurance contributions are then applied. The total tax payable is determined. Personal allowance is income exempt from income tax. Capital gains tax applies to asset sale profits. National insurance contributions link to earnings. Inheritance tax affects estates above thresholds. Corporation tax targets company profits, not unincorporated businesses. Unincorporated businesses may face VAT and capital gains tax. Inheritance tax applies on business ownership transfers. Online services simplify tax processing. Software aids in record keeping and compliance. Digital systems reduce errors and support making tax digital. A sole trader's tax liability involves several steps. Calculate taxable profit from turnover and expenses. Deduct personal allowance to find taxable income. Apply income tax and national insurance contributions. The total tax payable is a significant consideration. Partnerships allocate profits based on agreements. Each partner is taxed individually. Personal allowances reduce taxable income. National insurance contributions add to the tax burden. Total tax impacts vary based on profit shares. Tax liabilities depend on personal profit shares. National insurance contributions significantly impact total tax. Partnerships face varied tax outcomes. Rising profits lead to higher marginal rates. Accurate year-specific models ensure correct liabilities. Unincorporated owners face direct tax liabilities. Tax is due even if profits are retained. Personal cash flow must cover business taxes. Unlimited liability increases financial risk. Rising profits can lead to inefficient tax outcomes. Higher profits push income into higher tax bands. National insurance contributions increase with profits. Personal allowances may be reduced or lost. Tax efficiency decreases as profits grow. This impacts business growth and reinvestment decisions. National insurance contributions add to the tax burden. They apply regardless of unincorporated structure. NICs are often underestimated by business owners. They significantly affect the overall tax cost. Comparing with incorporation highlights the dual charge impact. Tax is often paid after profits are earned. Payments on account may require advance payments. Unexpected profit increases can strain cash flow. Small businesses with uneven income face challenges. Accurate planning is crucial for managing liabilities. Unlimited liability links closely with taxation. Tax debts remain personal if a business fails. HMRC ranks as a priority creditor. Personal assets may be at risk. This highlights the financial consequences of tax non-compliance. Tax compliance requires accurate record-keeping. Deadlines must be carefully managed. Errors can result in penalties and interest. Compliance can be time-consuming without professional support. This adds to the stress of managing unincorporated businesses. In conclusion, determining taxation liabilities for unincorporated organizations and individuals requires a clear understanding of relevant tax rules, thresholds, and reporting requirements. Factors such as income sources, allowable expenses, personal allowances, and applicable tax rates all influence the final tax liability. For unincorporated organizations, profits are taxed on the owners rather than the business itself, while individuals are taxed based on their personal income and circumstances. Accurate calculation and compliance with taxation legislation are essential to ensure that liabilities are met correctly and on time, helping to avoid penalties and supporting effective financial planning. Thank you for watching this video. If you have any questions, please feel free to contact us via email or WhatsApp at 074-843-61688.